Hi everyone, let's get going. So first, just wanted to start with sharing a disclaimer page. Let me just go ahead and share that. Please take a few seconds to just read through the disclaimer, and then we'll get going with the actual webinar. So I'll just give you a few seconds to read through. Thank you, folks. Raj, why don't you go ahead and introduce?
Sure. Yeah. First of all, thanks to Anil Garu for giving your speech today. We are from Portland. This is GPTA, and we are with the community from last 25 years. We are working hard to give the best to the community, and once again, thanks for your time today. And just to give the introduction of Anil Garu, he's born and brought up in Andhra Pradesh. He has 17 years of experience in financial education, and he's a counselor of financial industry. And he has a company called AG FINTAX. It's started in 2019, and he's based out of Seattle. And he's a Forbes Financial Council member, and he has given so many articles on the finance and tax planning expertise, and he has given guest speaker. He's a guest speaker for most of the channels and the TV shows. He is giving the presentation today. Over to you, Anil.
Thank you. Thanks and Rajshekhar Garu, and thank you very much, Sridhar Garu, and to all the GPTA leadership team. Thanks for this opportunity. And good evening, everyone. I'm so glad to see many people on Sunday evening. And this is the right time to know more about taxes, because we all think about the taxes. Most of them think about the taxes only in the month of March and April only, because we have to file taxes. But I always say that we need to think about the taxes throughout the year, but that's what people do, but still people think only 1-2 months. So it's very important, because you might be getting ready to file your taxes. This small knowledge will help you to ensure you are an accountants or CPAs are filing taxes appropriately. There are a lot of tax planning saving tips are always available, but your team, with whoever you are working, or you might not be aware. But if you know at least some tips, you are going to save some taxes. You can go and ask your an accountant saying that, hey, what happened to this? What happened to this? Can I do this? Can I do this? So, and generally I try to bring a lot of value addition whenever I give webinar or seminar. In the next 45 minutes to 1 hour, you are going to learn a lot, and there will be a lot of takeaways. So let's start my presentation. I'm just sharing my screen. And during this presentation, if you have any questions, feel free to post your questions in the Q&A. I will try to take it at the end of the session. Or if you have any more questions, even you can send an email to me also for any one-on-one specific questions if you're not able to ask over the chat box. I hope you all can see my screen. Rajshekhar, we can see, can
we can see.
Okay. First of all, this is a 2022 tax webinar, and thanks to the opportunity to the Greater Portland Telugu Association. So, and a small disclaimer from my side. Today, whatever I'm sharing, I'm only just sharing my knowledge and information, my knowledge over US taxation and also India taxation, because I'm also a chartered accountant. And whenever we do some recommendations, we give recommendations on the generic sense. It may be applicable, it might not be applicable. So please check with your tax accountant, tax pro, or CPA, or at least one-on-one with me to ensure that they are applicable for you. So because in the next 1 hour, you are going to spend some time with me, it is very important to know with whom you are talking. I am Anil Grandhi. I am the CEO and founder of AG FINTAX. And I am also a Forbes Finance Council member. I am the first ever Telugu speaking Forbes Finance Council member in American history. Until now, I am the only person on the board. And I was working for Amazon, Starbucks, PricewaterhouseCoopers, and Sun Edison. It was the world's largest renewable energy company, and I was the finance controller for there. And I am also a guest speaker, and for a lot of media channels. And to know more about me, just Google search about me. You will find a lot of articles which were written by me, including big mag giants, news media, and also CPA portals. And in the Forbes, I am also the expert panel member, where we discuss about the current issues in the economy. And I'm the only Indian in the expert panel to discuss about few important scenarios for the economy. Okay. So why do you need to know about the taxes? Because your tax accountant or your accountant will know everything. Why do you need to know? Because you need to know, every one of us need to know about the taxes, because they are one of our major expense every month. If you look into all your month-on-month expenses, list on all your expenses, then look into that. What is our biggest expense? People think their housing expenses are the biggest. It can be in house monthly EMI or rental or whatever it is. But the biggest expense is taxes. So because the taxes are being deducted on our month-on-month paycheck, so we don't feel the pain of the taxes. But Uncle Sam wants you, whether you make money, you need to pay taxes. Whether you spend money, you need to pay taxes. Whether you save money, you need to pay taxes. Whether you die, you need to pay estate taxes. So whatever you pay, whatever you do, you need to pay taxes. So you cannot escape from the taxes. So it's better to learn about the taxes, at least know some basics. You are not expected to become an expert, tax expert, but at least you should know few things. So if you look into the last 100 years, in America, what was the highest tax rate? It was 94%. But right now it is around 37%, and we strongly believe that it will continue to grow up, because our US debt is $29 trillion and our debt to GDP ratio is 127. So it means our debt is more than GDP. How government is going to get the money in the future? So taxes will continue to go up, and it is very, very important for you to learn some tactics about taxes, because you may leave your job, you may go back to your countries, or you may retire, you may divorce your family, but you cannot escape from the taxes. Taxes are so important in our day-to-day life. So just don't ignore it. This was the secret. The secret formula is this is what the secret for the success to how you build a net worth. On average, we all pay around 25, 30, 35, 40% in taxes. State taxes, federal taxes, social security taxes, Medicare taxes, all those taxes. But when we pay 30, 35, 40% taxes, how multi-millionaires, billionaires, or ultra-wealthy people or intellectuals are paying taxes? If we look into this is a public information. If you look into the details, all the big guys like Warren Buffett, Mark Zuckerberg, Elon Musk, they all are paying only just a couple of percentages as a taxes, because they know, they found the source of the success, that is taxes. So every dollar you earn, you are paying 30, 40 cents. Rather, find a solution on tax planning where you can save taxes legally. And so not all these multimillionaires, no one is behind the bars, because they are doing all the taxes savings legally. Tax code is the same for everyone. It's only up to us how we optimize it. That's all. So tax planning is very, very important. And whenever you think about the taxes, it's very important with whom you are working. So because taxes is not your day-to-day job. So at least when you run a business, or when you are financially, when you are making some money, it's very important to work with the right team member who can save you on taxes. Otherwise, blindly submitting a tax return won't help you. Tax return is a template given by IRS. One person will go and fill the details and submit the tax return. That is like a postman job. That is not the one. We need to find a person who can bring the value addition for you. So just think like, when was the last time you were an accountant or tax guy came to you and said that, hey, here is a tax idea, come on, let's start saving taxes. If you're an accountant is not helping you on the tax planning, it may be time to explore other alternatives. So tax planning is just don't think about the taxes only at the time of filing the tax returns. At least after filing the tax returns, at least spend some time during the year, spend some time with the right guy and optimize our tax savings. Otherwise, all our hard work, we are just donating to IRS. I am not opposing paying taxes. I am only talking about stop paying overpaying of taxes. IRS will never come back to you and say that, hey, Anil, you paid overpaid of taxes, come and take back this money. They don't do it. But if you underpay, they will come to you. So it's your responsibility to ensure you are optimizing taxes. So right now, this is a tax season. So I'm going to talk about only 2021 taxes. So whatever money you make in US, for the first $25,100, it is completely tax-free. And after the $25,000, if it's married filing joint, that is called standard deduction. If you're earning more than $25,100, then you need to pay taxes that ranges from 10% to 37%. And you might have been paying taxes for the last 10, 20 years. But in the last couple of years, there are so many changes have taken place. It is very important you need to know those taxes, those changes, and ensure that they are implemented for you. If you're an accountant or tax guy is not being updated with what's happening in the economy, because we all know so many changes have taken place in the last 2 years. The person with whom you're working, he should get updated. If he is not updating, who is the loser? You are the loser. So it's important you know the things and ensure that he is doing the right things. So the first one I want to talk about stimulus check. If your income is less than $150,000, then every person will get $1,400 per person in your family. So it's not only for you, including for our kids. If you have received already last year, it is 100% tax-free. If you have not received, please claim that money now when you file taxes. If you are a family of 4 members, 1,400 into 4. So that is the money you are going to get $5,000 plus. So don't leave that money on table. And for every kid you have, you are going to get $3,000. If you are a dependent, $3,000 you are going to get for every kid as a child tax credit. It means IRS is coming and giving the money directly into the pocket, keeping the pocket. And if the kid is under 8 years, then you get $3,600. Then your unemployment income. Last year, if you received any unemployment income, that is tax-free for the first $10,200. And if you have done any charitable contributions for the first $600 is completely tax-free. If you have the supporting, you get a tax deduction if you have a supporting documentation. And if you are running a business, if you are a business owner, if you received a PPP loan and the loan is forgiven, it is 100% tax-free. And if you received employee retention tax credit, that is taxable. And on top of, as I said initially, the first slides, for the first $25,100 is standard deduction. But after that, are there any other deductions on top of that? Answer is yes. So you can contribute to the HSA health savings account, charitable contributions, educator expenses. If you are a teacher, you get additional $250, retirement contributions, 401k and IRA contributions, health insurance premiums, and student loan interest up to $2,500. So these all are on top of the standard deductions. But IRS also says that they listed 5 types of expenses. If all these 5 expenses together, if it is exceeding $25,100, that is standard deduction. You can even claim more than $25,100 as a deduction from your income. That is medical and dental expenses if it is exceeding 7.5% of the total income of your income. State and local taxes, if you are paying, including your property taxes, to the maximum of $10,000. Your home mortgage interest and points, and if there are any charitable contributions, and if there are any natural disasters, if you incur any expenses because of the natural disasters, all those expenses together, it is $25,100 you can get it as more than $25,100, you can get it as tax deduction under itemized. So when you talk about the home mortgage, how much tax deduction I can get for the interest? You can get the interest what you pay only on the loan of up to $750,000 loan amount only. If your loan amount is more than $750,000, you won't get it. But if it's less than $750,000, you will get it. If there is any HELOC loan which used for a home improvement, and if you're paying interest, that also is tax deductible. And you can claim 2 primary houses. The second house can be a vacation house. Or if you have a house in India, and if you are paying an interest, and if you are not getting any rental income there, like example, I have one house in India. My parents are living. Whenever I go to India, I go and stay there. And whatever interest I pay there for my home mortgage, that also it can be deducted along with my house in US. So then health savings account in IRS code, HSA is one of the great tax saving tool. It is like, it's just an account where you open an account, you contribute some money. That money is a tax deductible because you are contributing. Then whenever you take the money out, if you use the money only for the medical expenses, that is also tax-free deduction. Like example, I want to give how much money you can contribute. For this year 2022, you can contribute $7,300. For the year 2021, that is for the previous year, you can contribute up to $7,200. So whatever money you contribute at $7,200, you get a flat 30, 40, 50%, whatever the tax rate you are, you get a deduction. And this money can be withdrawn for any of the medical expenses, and that is also tax-free deduction withdrawals. Then dependent care child care. When husband and wife both are working, they can send their kids to the daycare. And if you are spending any money to send your kids to the daycare, per kid, IRS is giving $4,000 up to $4,000. That is whatever money you spend, 50% of the money, whatever you spend, or $4,000, whichever 50% or $4,000, whichever is low. So to the maximum of $4,000 for every kid, you get as a credit. IRS is coming and putting money in your pocket per kid if you are sending the daycare. If you have 2 kids, $8,000, and that is the maximum you can get it. Then the other big tax saving tool is start a business. Whatever job you are, you may be paying a lot of taxes on average, because for the W2 employees, the opportunity to save taxes are very less. But if you have a proper visa, I cannot encourage H1B candidates, but if you are an H4 EAD, green card or citizenship, it is an opportunity for you. And if you are on those green card, citizenship, or H4 visa, H4 EAD, and if you are not working, if you don't have business, you are missing a golden opportunity. America is a land of opportunities. Our resources are the same for everyone. It's up to you. How do you use those resources? Turn your passion into the business. Even though you are working on a W2, start some business in the side gig. That will open up the doors to save a lot of taxes, and you're also working on a passion. Who knows, this part-time business may become a full-time business for you. Once you become full-time for your business, you have time freedom. You have time freedom. Once you do the right business, you may have a financial freedom. I was working for Amazon full-time. I started my business as a part-time, the tax business. After 6 months, I realized I have more passion here. Then I became a full-time. God blessing, I'm doing great in my business. I'm enjoying in what I do. It's converting a passion. And IRS says that, come on, if you are doing a business, I want to encourage you. And they say that you can claim a lot of expenses. You can claim home office expenses, like a share of your home, all your home expenses can be claimed in your tax reduction, in the tax return as expenses. Like utilities, insurance, HOA, security, mortgage interest, property taxes can be shared, maybe 10%, 20% based on how much space you are using for your home, for your office in your home, exclusive and regular usage. And travel expenses, whenever you go out, to meet customers, vendors, or to attend seminars or conferences, all your expenses, including Uber expenses from your home to airport, or you take a Starbucks coffee at the airport, every expense is 100% tax deductible if you have a business. Meals categories, whenever you go out and meet your clients, vendors, suppliers, or some employee gatherings, meetings, or events, all those expenses are 100% tax deductible meals expenses. If you are having a vehicle, there are a lot of advantages. If you are paying medical insurance premiums, those are tax deductible. And on top, if you buy computers, laptops, monitors, desktop, watches, Apple pads, all any electronic devices, or if you are paying some fees to your an accountant, CPA, or attorney, or research materials, whatever you do, all these expenses can be tax deductible, provided they are legitimate. Don't misuse this opportunity. As long as their business purpose legitimate, and if you have a proper supporting documentation to prove that they are business expenses, all these expenses can be deducted. Once you deduct all these expenses, what will happen to your business income, your total net effective tax rate? Your effective tax rate may go down from 35% to 20%, or 25%, or 15%. It's up to you how to use it. And auto deductions, if we have a vehicle, and if you are using for the business for at least minimum 50% for the business purpose, you can claim repairs, maintenance, fuel, EMI, monthly installments, interest, and on top, and depreciation. If you are owning the vehicle, you can even claim a depreciation also. And if the vehicle is more than 6,000 pounds, like Range Rover, Tesla X, Range Rover is $95,000. Tesla X is $145,000. If you can demonstrate that you are using the vehicle for the business purpose at least 50%, then you may be eligible to deduct the entire value of the vehicle in the same year as a tax deduction, flat. So these are the opportunities. And if you are running a business, if you are a 1099 contractor, that itself you are a business owner only. That is equal to your business owner. If you're running a business as a single member LLC or 1099 contractor, I request you to consider electing S corporation. If your net profit from the business is more than $50,000, you may be able to elect to S corporation. Please work with your tax guy on this, because on your regular LLC or 1099, whatever money you make on the business, you need to pay federal taxes. State taxes is common, but you also need to pay social security taxes and Medicare taxes. If it is an S corporation, you don't need to pay 15.3% social security taxes and Medicare taxes together. It's on the profits, you don't need to pay those things. So it's a big saving. If you are a 1099 contractor, please consider converting it to an S corporation or single member LLC, or work with me, or reach out to me. I will guide you, or work with an accountant. This one strategy will help you to save at least $5,000 to $7,000 per annum in taxes. Then paid leave tax credit. If you are a business owner, if you are a self-employed, if you are a 1099 contractor, or if you are running a small business, you may be eligible to get a paid leave credits also. If you last couple of years, in 2020 and 21, 2 years, if you are diagnosed with the COVID, if you are impacted with the COVID, either you or your family members, or if you have to go for quarantine, or if you had COVID symptoms and seeking for medical diagnosis, in those cases, you can get a 10 days paid sick leave, and based on your income level per day up to $500, IRS will come and pay you. So it means $5,000 IRS will come and pay you based on your income levels. And for suppose if you're not able to send your kids to the daycare because daycares were closed, or your schools were closed, or daycares were not available, then for 50 days, you will get up to $200 per day, which is $10,000. With this one strategy, you will be able to get $15,000. IRS will come and put it in your pocket. $15,000. It's a credit. It's not just a direct tax credit if you are impacted because of the COVID last year. Then employee retention tax credit. If you are running a business, you may be eligible to get employee retention tax credit if the business is down by 20% in the last year. Compared to the 2019, if your business is down by 20% in any quarter in the year 2021, for every employee in your company, you get $7,000 per quarter. Example, if you have 10 employees and if your business is impacted, per quarter, you are getting $70,000 tax credit. IRS will send a check to you, $70,000 to you. This is per quarter. And imagine if you have 50 employees, if you have 100 employees, if you have 500 employees, how much credit we are talking about? I have so many clients who claim millions of dollars on this employee retention tax credit, but your business has to be down by 20% compared to the 2019 in any one quarter. Then see, there are so many opportunities for the businesses. Then do you have a business? If not, at least start thinking about some part-time entrepreneur. You need to be an entrepreneur. If you are on W2, you will continue to be, even after 10 years, you will be in the same similar financial position only. You may be able to buy 1 or 2 more properties, that's it. But after 10 years also, you will continue to be depending on your month-on-month paycheck. You have to come out from that mindset. It's an opportunity. We all are intellectuals. That is why we are having this luxurious and fortunate life in America financially. So if you can think more, if you can spend more time, if you become an entrepreneur, instead of paying, apart from your working and the passion, instead of paying a lot of taxes to IRS, you are keeping that money for you. If that my extra saved money can be used for your kids' education, can be used for your retirement planning, can be used to meet your future long-term goals. And so there are so many opportunities are there. I have thousands of clients. I talk to so many people. I guide people many times on what are the business options are available. If you are interested, reach out to me. I will tell you what are the great lucrative business opportunities are there. At a high level, very popular ones, you can become a real estate agent. You all know how the real estate market is now. You can become a real estate agent, work only in the weekends. Come on, you know how much money you make. You can become a photographer. You can become a mortgage loan agent, or you can even become a financial planner, financial consultant. If you become a financial consultant, you can help your friends, families, community, or friends on financial planning, retirement planning, kids education planning, or insurance planning, or savings, tax savings, whatever it is. There are so many opportunities are there. It's up to you how you grab it. If any one of you are interested to become a financial planner, reach out to me. I will train you. We will train you because we have thousands of clients where I want to help, and I serve free financial planning to the society. I don't charge even a single dollar to offer this financial services to the people, to the community. If anyone is interested, reach out to me, or if you want to become a financial planner, reach out to me. We will train you so that you can take care of our own clients. So this is a great opportunity. Then after that, so then in our community, most of us, we invest in stock market or real estate. In both the scenarios, if you sell our stock market or real estate incomes, what we do, if you sell, we get a capital gains, and you need to pay capital gain taxes. So these capital gain taxes are different. It has a different tax rates. If you're holding the property for more than 1 year, your tax rate is 0 to 20%. If you're holding the property for less than 1 year or shares for less than 1 year, you are paying taxes up to 37% federal and state taxes, which is nothing but your regular tax rate. So whenever you want to sell a property or stock, try to not sell them within 1 year. Then if you are right now, the property market is doing great. The real estate market is great. If you want to sell your property, the first $500,000 or capital gain on the primary home sale where you are living. If you lived there for at least 2 years in the last 5 years, and if you sell the property, $500,000 income, you don't need to pay any taxes. I will tell you an example. Right now, the property where I am right now, assume I bought the house for $600,000. But right now, the current market value is $1 million, because you all know how real estate market is. If I sell this property, I will get $400,000, but I don't need to pay even a single dollar as a taxes. So then 1031 exchange. If you have a real estate income, if you have rental property or investment income, whenever you sell those properties, you get capital gain and you need to pay taxes. Instead of paying the taxes, government IRS says that go and invest the entire sale proceeds to buy one more like-kinded real estate property, so that you don't need to pay any taxes. You are just deferring it. And the second property, you need to buy it within 180 days. Then if you are investing in the stock market, we all know last couple of months, stock market is very volatile. It is red. It's a red bath. Whenever the market is down, most of them, what they do, they will not do anything and they will wait for the market up. But there is a concept strategy called tax loss harvesting. So whenever the market is down, we recommend you to consider selling sell the stock which are in the red, book the capital losses. Then these losses can be adjusted with any of the capital gains in the future, either this year or in the future, or every year $3,000 with your W2 or 1099 income. And it's not only that it will be rolled over to the next year. The losses can be rolled over. But one very important clause here is wash sale rule. You cannot buy the same stock. Whenever you're selling a stock, booking a loss, you cannot buy the same stock within 30 days, which is very, very important. Then in US, if you remember the first of one of the slides where I covered how you are spending your money month on month, an average US resident saves less than 1% for their future. So IRS says that, hey guys, if you do savings for your retirement planning, I want to support you by giving some tax savings. So there are three types of categories are there. There are a lot of opportunities are there. So I'm sorry. There are three types of categories are there. Whatever you do, you need to pay taxes, either now or in the future. The first category is called taxable category. Whatever money you make, you pay taxes in the same year. And the tax deferred is you enjoy the taxes this year, but you will be paying taxes in the future whenever you take the money, like a 401k. If you are contributing to the 401k, you enjoy the tax benefits now, but at the time of retirement, whenever you take the money out, you need to pay taxes. And there is one more concept called tax advantage, where you invest the money which is already tax paid. So tax paid money, you are paying taxes now, but you enjoy the tax benefits forever in your lifetime. Bite the bullet now when there is no certainty for the future tax rates. Like example, money bonds, Roth IRA, Roth 401k, or 529 plans, or life insurance retirement plans. So these are the great tools. Many intellectuals save money here. Middle class families save money here. People who can't even think much, they save money. They save money here. So wherever category you are now, divert all your investments to the extent possible in the tax advantaged category. Then 401k. We all know about the 401k, but most of them are not contributing. If you have a 401k, you can contribute up to $20,500. You get a tax deduction in the same year. So, and if your employer is matching the 401k, don't ever miss that free money. If you are having a self-employed or 1099 contractor, if you already have a solo 401k for the last year, you can contribute up to $58,000. Or if you're opening it this year, you can contribute up to $61,000. So $61,000, just imagine how much taxes. Example, if you are in 35% tax bracket, federal and state together, we are talking about around $20,000 plus. Instead of paying $20,000 to IRS, that you're keeping it in your pocket. So this is solo 401k is one of the best tax saving strategy. You should this is one of the best tax saving strategy you should consider. Then if you don't have the solo 401k for the previous year, then I recommend you to contribute to the SEP IRA. You can contribute to the SEP IRA before April 15th of this year, before filing your taxes. You can contribute up to 25% of your self-employed income. If you are a W2 employee, this is not for you. These all benefits are only for business owners. And IRA. And IRA, every one of us can contribute $6,000 to IRA. And you have time till April 15th to contribute for the previous year. And how much money you can contribute? $6,000. If your income is less than $125,000, you get a tax deduction. If your income is more than $125,000, even though you contribute, you don't get a tax deduction. But can you contribute? Yes, you can contribute. Many people ask me, when I have a 401k, can I contribute to an IRA? Answer is yes. Anyone can contribute to an IRA. Jeff Bezos, Mark Zuckerberg, you, me, can contribute. Can I get a tax deduction? Answer is no if your income is less than, or if your income is more than $125,000. But still, I recommend you to contribute. I will tell you why. And Roth IRA. So instead of, if you remember, this traditional IRA is a tax deferred. This is a tax advantage. So when this is a tax deferred, instead of tax deferred, I recommend you to put the money in a tax advantage where you can, if your income is less than $208,000, you can contribute to IRA. Once you contribute, you are going to have a Roth party. Once you put the money, $6,000 for you, $6,000 for your wife, even though she is not working, and if both together income is less than $208,000. There, if your income is more than $208,000, there are some other alternatives are there to put the money here, which I'll cover it in the next slides. But once you put the money here in the Roth IRA, now you will start enjoying. How? Once you pay taxes, after that, you can put this money by, if you are having a self-directed Roth IRA account, you can invest in stock market, retirement accounts, mutual funds, cryptocurrency, or pre-IPOs, startups, real estate, flipping, or you can even give a loan to your friend for an interest, or you can go and invest in your friend's company if he is starting a company. You can invest wherever you want. If every year, if you are paying a lot of taxes from your capital gains because you do a lot of stock trading, you are doing something wrong. You are not working with the right professional who is not helping you. So, because if you do all these tradings from your Roth IRA account, how much taxes you are going to pay every year? How much money, how much trading you do, how much wherever you want to do. Every year. Right now, if example, if you are 40 years old, at least you have 30-40 years time left in the life. How many times you can use this money again and again and again and again, again and again. If you are in the US for the last 10-20 years, and if you don't have a Roth IRA account, then imagine how many hundreds of thousands of dollars you left it on the table. This is one of the best strategy to have. Every one of you should have Roth IRA account. Okay, you ask me, hey, if my income is more than 208,000, so what to do? I will cover that. I want to give one more example. What is the power of Roth IRA? So I want to give one example, Peter Thiel. Peter Thiel is the co-founder for the PayPal and also the board of director for Facebook. He is a friend of Mark Zuckerberg. In 1999, his Roth IRA account is $2,000. Mark Zuckerberg came to him and said, hey Peter, can you invest in my Facebook? He said, my accountant told to invest from my Roth IRA account. Hey, and he invested. Those couple of thousands of dollars, now it has become $5 billion. How much taxes he needs to pay? 0. Because he invested from the Roth IRA account. That if at all, if it is not from Roth IRA account, if he just invested from his own personal account, or if he invested from his brokerage account, he needs to pay a couple of billions of dollars now to IRS. This is the power of Roth IRA. It's not only that case, there are so many intellectuals, multi-millionaires, billionaires have Roth IRA accounts. Warren Buffett, Ted, Radsall, Peter, and many people are there. What about you? What about you? If you don't have a Roth IRA account, you are not with the right professional at all. They can't even guide you, recommend you one basic concept. That is why tax planning is very, very important. If you are thinking about the taxes, to file taxes only at the time of filing, maybe March or April, doesn't matter whether you are in a W-2, doesn't matter whether you are a business owner. You have to meet your accountant again in the year for the tax planning. If that person is not helping on the tax planning, fire him. There are so many accountants are there in America. So you're working with the right professional, very, very important. Now, if you ask me, Anil, this is good, but all these multi-millionaires incomes are more than $208,000. How they are investing in the Roth IRA? This is the answer. Roth IRA has two doors, front door, back door. If your income is less than $208,000, you have an entrance. If your income is more than $208,000, doors are closed. Then there is a concept called back door. You invest money in the traditional IRA where you don't get any tax deductions. It's okay. But that money transfer it to the Roth IRA account. From here, tax free forever. Now you're 40, 50, 60, 70, how old you are. Or even something happened to you, it goes to the next generation. Even they don't need to pay federal taxes or state taxes on this money. But whenever you want to do it, you should not have any regular IRA accounts. That is very, very important. This is not for everyone. Please work with an accountant or at least send an email to me. You can see my email ID here and I will guide you. Or otherwise, you will get up into the problem. This is an advanced level tax saving. So don't directly implement it. Please work with your accountant. On top of this, now you understand great backdoor. Now, are you thinking that you can contribute only $6,000? Only for $6,000? Why Anil is breaking the head? There are a lot more opportunities are there. Then you can, if you have a mega backdoor, you can contribute up to $64,000 every year into the Roth IRA account. This is called a mega backdoor IRA. So if this is not there for everyone, if you are a self-employed, this is there for you. If you are running a small business, side business, financial planner, real estate agent, or if you're a single member employee, or if you're a 1099 contractor, this is there for you. Or you need to work with the bigger companies like Amazon, Microsoft, LinkedIn, Intel. Most of you might be working even in Intel also. Even they do also have mega backdoor. If you are working in any of those companies, you can contribute every year $64,000 into the mega backdoor. Then imagine in the next 5 to 10 years, how much money you will have a mega Roth IRA. That money you trade, invest, cryptocurrency, stock market, pre-IPO, startups, you do wherever investment you want. Zero taxes. That is the power of Roth IRA. Then still there is a lot more opportunities. Apart from the mega backdoor, if you still have any rollover 401ks, IRA accounts, you can convert them into the Roth IRA. When you convert them, you need to pay taxes. It is okay to pay taxes. Bite the bullet one time. You have to pay taxes at some point of time in your lifetime. Bite the bullet now. When you retire, I am very confident every one of you will become millionaire or if not billionaire. Then the tax rates are going to shoot up. Rather, convert everything into the Roth to the extent possible. Then build your assets tax-free. And whenever you convert your rollover 401k accounts to IRA, they reach a tax liability. Please work with an accountant or at least reach out to me. I will guide you, because if you do some mistake, you will end up with paying a lot of taxes. And And before April 15th, you can do all this to save some taxes. You can contribute to the HRA, HSA, you can contribute to an IRA, you can contribute to any profit sharing plans, you can contribute to the 529 plans, and you can contribute to SEP IRA also. So, and my last topic for today, FBAR and FATCA reporting. We all hail from India. It's very common that we have some connections with India. If you have any foreign financial accounts which are totaling to more than $10,000, you have to file a form called Foreign Bank Account Reporting. It's a mandatory. There is no option. But this is not for the real estate properties. If you have any foreign financial accounts in out of country, what is the definition of financial accounts? It can be bank accounts, savings accounts, checkings accounts, or brokerage accounts, stock accounts, mutual funds, or commodities, or insurance policies with a cash value. You may be having an LIC policy, you may be having a policy with an ICICI, Birla Life, whatever it is. If it has a cash value and if it's exceeding more than $10,000, all this together, you have to file FBAR. FBAR is just a reporting to the government. If you are not paying any taxes, you are just reporting to the Department of Treasury. The due date to file FBAR is April 15th, which can be extended by 6 months. And if you don't do it, you will be ending up with penalties and interest. You will be end up with a lot of penalties. And you don't think that how do they know about my Indian bank balances? We have an understanding between India and US. They will come to know. And I do also handle a lot of notices from IRS and Department of Treasury for not filing FBAR. Don't miss this. If you miss this, you will be paying a lot of penalties. And if your income is more than if you have more than $150,000 at any point of time in the last year in the foreign financial accounts, you have to file one more form called Form 8938. Then, so now if you understand, the tax planning is very, very important. There are so many strategies we discussed. If your accountant or tax guy is not discussing with you, you are missing it. So it's very important. Working with the right tax strategies and team is very, very important. We are offering services to our community for free. All these services, investment guidance, some tax saving tools, college planning or retirement planning, protection planning or estate planning, will and trust. All these opportunities we are doing as a package like a Fin 360. If you want any of these services for free, reach out to me, send an email. I'm happy to help you. If not, if you want to become a part-time financial advisor, if you want to help your community, society, friends, families, reach out to me. We will train you so that you can help my clients, you can help your community also. Then if you are a business owner, we can help you. I can personally help you on designing a road plan for you to save taxes legally, morally, ethically. Very, very important. And we offer a $10,000 minimum guarantee. If I'm not able to, if you are running a business owner, if I'm not able to save minimum $10,000, you don't need to pay me even a single dollar as taxes if you are a qualified business owner. Reach out to me. I'm happy to look into your scenario and help you. And we help you on filing a tax returns for businesses, individuals, small businesses, big businesses, and our partnerships also. Many people think changing an accountant or CPA is very difficult. No, it's only a bit. It's very, very easy. You just need to have last year tax returns and current year supporting documentation. That's it. We are happy to help you to file your taxes. We have licenses to file taxes in every state in America. If you reach out to us by tomorrow, we are offering a 10% discount on our regular fee. And after filing a taxes, we are unique in the industry. We offer one-on-one tax planning with a CPA to you. Once you file taxes, now this is a busy tax season, but at least once you file taxes, after that, for this year 2022, we sit with you and we guide you on tax planning. Then tax planning, and also we take, it's a one-stop solution. We take care of retirement planning, college planning, investment guidance, all those things. We take care of that. So you don't need to worry. It's a one stop. And once you file taxes with us, if it is an individual, if you get any notices from IRS in the future, we are there. Audits, we are there. You don't need to pay even a single dollar for any of those things in the future. If you are a business owner, we are offering a 25% discount for the first time business owners filing taxes with us. And thank you very much for this opportunity. And this is what my contact details. We also shared my contact details in the charts, in the chat box. And I do also have a exclusive WhatsApp group for the business owners. If you are a business owner, please join our business WhatsApp group. We continue to share a lot of information about the taxes, finances, and everything. And you can join us. So you can reach out to us. If you are a business owner, schedule a meeting with me. If you are a single mom, if you're a single individual, if you don't have the business, if you need my consultation, we offer paid consultation to you. If we are happy to answer your questions, or if you want us to file taxes, we will be happy to file taxes for you. We can contact us, email us, and we'll take care from there. Thank you very much for this opportunity to GPTA, and I'm happy to take up any questions, if any. Thank you.
Thank you, Anil Garu. I'm looking at some questions that came up during sign up and in the chat.
Yes,
One
sir.
question we have here is the stimulus check for all H1B and ITIN holders as well, or is it only for?
Yeah, only for the residents.
Only for the residents.
Yeah.
Okay. There was a question about first-time home buyer tax credits in Oregon. Can you touch base on that?
Yes. So right now we don't have any specific tax savings at the federal level for the Oregon residents. So it used to be there, but now it is not available still. Yeah, it's not. But actually, Biden has a proposal now to give $15,000 as a tax credit for the first time home buyers, but this is not yet implemented. Yeah.
I'll let anybody else on the call answer questions. Otherwise, there are a few questions that folks had asked when they signed up. So I'll ask those. So let me. So I had a question, and so if you're already in the higher tax brackets, would you still suggest converting some of the IRA funds into a Roth IRA? Is that still
very
still
good question,
advisable?
Akyoga. That is a really very good question, sir. So it is up to you. If I am in your position, I will do it, because I strongly believe my retirement, after my retirement, my income will be much higher, my net worth will be much higher. And I already showed you one slide. What is our debt? What is our future expected? Our GDP is higher than, sorry, our debt is, our economy debt is higher than GDP. So the probability of tax increases are very high. So because we are intellectuals, I recommend you to pay taxes once it's a tax-free money, and if you know how to multiply the money. If you are a person who doesn't want to touch your money, you just keep it in your bank account, then you don't need to pay taxes if you are already in a higher tax bracket. But if you are a guy who invests in the stock market, real estate, you know how to multiply it. And if you have a lot of time for the retirement, I recommend you to pay taxes now. After that, every year, you can play with the money. You don't need to pay taxes. Because I will give you one example. I was high paying an employee in Amazon. I was contributing to the 401k, but I didn't contribute to regular 401k. I was contributing to the Roth 401k, so that I am paying taxes now. I'm going to enjoy the tax benefits forever in my lifetime, me and my next generation also. If something happens to me, even they don't need to pay taxes when they get their money. So
thank you, Anil. Yeah.
Thanks.
Looking through the questions. Anyone else on the call has questions for Anil Garu? Lot of very useful information.
Yeah, thank you, Anil. This is Surya. Actually, I have a question on the wash sale that you just talked about.
Yes.
Like you said, no to wash sale, right? Can you be more elaborate? Like, what happens when the wash sale comes up?
Got it. So okay. Wash sales are if you're selling a stock for loss, and if you're buying the same stock within the 30 days, you get a tax deduction. But there is a capital losses. But in your 1099B, whatever you receive from your brokerage account, they'll say that it is a wash sale rule. If that is the case, it is not allowed to claim those losses. So that's what happens. So the losses will be declined. So you need to be very cautious. Yeah, you need to be very cautious when you do the wash sale.
Okay, great. Thank you.
No problems.
Just following up on that wash sale, one thing in various forums what I've read is that if you basically do whatever transactions you do, but if you basically get rid of that stock and all those related instruments by say November, and then do not get into the stock till the next year, that all the sins of the wash sale are washed away. Is that true? Or?
It's a 30 days, correct, sir. November, if you sell the stock, don't buy for the year. That's called correct, 30 days. Yeah, I mean, you interpret it in another way.
I know.
Simple formula is 30 days. Simple.
Sure.
Yeah.
Okay.
Yeah, and someone messaged me. We are new to the US and started living here since July last year. Are we eligible for the credits that we are mentioning? You are mentioning. Yes, few credits are eligible, like dependent care tax credit. If you are sending your kids to the daycare, you are eligible. And if you have kids, every kid will get $3,000. If that is also tax credit, that is also you are eligible. So and you can also contribute to all this IRA, 401k, what are the retirement plans or whatever I discussed, you can contribute for them also.
Maybe one question to add to that, sir. This $3,000 tax credit, is it only if the kids have the social security number, or even without that?
Good point, Andy. Only if they have an SSN number. If they don't have an SSN number, they get an ITIN tax credit, which is $500.
So there was another question, Anil. Can you please talk on the double taxation India and US on property sale?
Oh, definitely, sir. Okay. So I am also a chartered accountant. I'm an expert on that area also. Okay, I will tell you. So whenever you sell some property in India, first of all, there are three things we need to three things has to happen. Action number one, you have to report those taxes, report that in India, pay taxes in India, because the income is generating in India. So they need taxes in India, number one. Number two, and that is one. Then you at the same time, you also need to report that income, capital gain income in US also. But you are not paying taxes in both the countries. You need to pay taxes at only one place, because we have a double tax avoidance agreement. It is called DTAA between India and US. So because we have this, you pay taxes to only one place, pay taxes in India, take the tax credit in US. The second one, you need to file Form 15. Once you pay the taxes, the second one, you need to file Form 15CA and 15CB if you want to move the funds from India to US. So otherwise, they will not allow you. The local chartered accountant has to stamp saying that these are tax paid money, free to go out of the country. Then only you can move the funds from India to US. And the third one is, the first one, report in India. Number two, report in US. Third, get the Form 15CA-CB to move the funds from India to US. And it is a simple, you don't need to worry much, but you can bring up to $1 million from as a proceeds in a year, in a calendar year in a financial year in India. That is April 1st to March 31st. You can bring that money from there to here. And the next week, I think March 6th, NATA, North America Telugu Association, NATS, North America Telugu Samiti, I think, NATS. They are having a webinar exclusively on repatriation of funds. I am only talking next Sunday. Today, Sunday, Next Sunday, again the same evening, I think our PST time zone, 4 o'clock, there is a webinar. If you want the details, I can share it with you, where I'm going to talk about how to move the funds, how the gift tax is treated, gift tax treatment, and different parameters. Thank you. That's it, sir. Yeah.
Yeah, thank you. So I'm going through any questions. I think there are no more questions that I see. I think one question is, which you'll probably like, is, are you accepting new clients currently?
Yes, sir. Yes, we are accepting.
Yeah.
We are accepting. And one thing I want to tell you, very important, because someone is raised this question, it's very important whom you select, with whom you are working. If you don't if you are looking for some comfort, a person who is very reachable, who can take the calls whenever you call, reachability or convenience doesn't matter, Andy. Who can help you, who can bring the value addition. So if you don't do this, like example, I covered so many topics, so many things today in the last 1 hour. If you are an accountant is not covering all those things, you are overpaying the taxes to IRS. So a tax planning we are unique in the entire industry. After filing taxes, after April, our season is over, we will have one-on-one with every client. One-on-one. Did you ever have one-on-one client with your CPA or an accountant? No, but we are doing it because I am running this business with a passion. I quit my full-time, high-paying job in Amazon and I started my practice, and you do see a lot of value. And it's not only about the taxes. We guide you on retirement planning, kids education planning, investment guidance, will and trust guidance. We don't charge anything extra for anything, because I want to ensure that all my society, community, my clients, all are completely become aware on what they need to do. Thank you.
Anil, this is Surya again. One last question. You mentioned that switching the CPAs, right? And you said, like, what is it required? And the last year taxes and the current year documentation is that it? Is that?
No, if you are a W2 employee, that's it. If you are a business owner, then you need to have access to your books of accounts.
Okay.
That's it, sir. Otherwise, not required. From here, whatever comes up, notices or audits, anything we take care. You don't need to pay even a single dollar for any notices, any things in the future.
Yeah. Thank you.
Thanks.
Awesome. Any other questions for Anil Garu? I don't see any more questions on the chat, and I think you've covered most of the questions that came up earlier.
I think some question came up. 1 second, someone messaged me. Thanks for the info. Just a quick question: if I have make rent money in India, should I file income tax return in India too? Okay, it's a good question, Ramya Garu. If your income is more than $250,000 in India, you have to file tax returns in India, and you have to report that income in US also. Whether you file tax returns in India or not doesn't matter. You have to report your global income in US if you are a resident in US. So don't. I know many people have properties in India, but they don't report to US. Interestingly, whenever you report your rental income in the US, you don't need to pay taxes because you have depreciation. 90% of the cases, whoever has a rental income, they don't pay taxes. I mean, they don't need to pay taxes on the rental income because they claim depreciation. It's only reporting at the end. I don't know why people hide the information. They don't file FBAR. They don't show rental income. They don't show interest income on your India bank accounts. Show, be compliant, be happy. We are so fortunate. We are living here. Pay the shares to whomever we need to pay. Pay them. Pay to the IRS or report them. Be happy. So once you get the notices, once your file is tagged with a red flag, you will continue to get the notices again and again in the lifetime. Do you really need all those worries? And I mean, once they do the audit, if they find that randomly they do the audit, if they find that I'm talking in general, if they find that you are doing some wrongs, you are hiding some information, or if you are not reporting something properly, then they tag you. So you will get very free. Every 2-3 years, you get a notice. Do you really need that pain? Happily pay taxes, be happy what we have. That's it. Thank you.
Awesome. Thanks, Anil Garu. I think I don't see any more questions. Thanks a lot for taking the time to talk to us.
Thank you, sir.
Yeah.
Thank you.
Thanks,
Thank you for this opportunity also to the Greater Portland Association, Telugu Association. I appreciate it. And Rajshekhar Garu, Sridhar Garu, and Srinivasanka Garu, thanks for all the coordination and making this happen. And I love connecting with your community and looking forward for a long-term relationship with the GPTA. Thank you, sir.
Thank you.
Thanks a lot, Anil Garu.
Thank you, sir.
Thank you.
Bye.